Hello everybody, welcome to the Investor Answers Weekly Q&A. This is my favorite time of the week. This is where I answer all the top questions that come in from you all. So today we're going to talk about Bitcoin, asset allocation, the crypto winter or the crypto bear market. We're going to talk about JPMorgan. We're going to talk about whether or not crypto is the new safe haven asset. Also going to talk about will crypto damage the world and economies, countries like Argentina, etc. And what would my portfolio look like today if I had $1 million to start one from scratch? And another question that came in was, what will work look like in the year 2030? And finally, dividend stocks. And then the fun question of the day. Very interesting. So we're going to try to tackle, I think it's 8 or 9 questions today, but without further ado, I am going to jump right in and start at the top. So the first question is from Chris Bastardi. He said, "Hey James, I'd like to ask if Bitcoin truly is the future and will it be more profitable than any publicly traded stock? And then why do you also do videos on stock market investing and investing in companies such as Tesla if you advocate so strongly for all roads leading to Bitcoin? Why not put all your money in Bitcoin? I really appreciate your channel and keep up with the good work. Thank you so much." So great question, Chris. Thanks for asking this. And this is a tough one. So I got into Bitcoin before realizing it would really take off. This was about 3 years ago, and it was just kind of on a whim. And then the more I learned about it, the more bullish I became until 2020 hit. And early 2020 and April timeframe when the money printing began, and because of my background in macroeconomics, I thought, wow, this is big. I was in already, but went in hard and spent a lot of my time trying to convince my network and friends to invest in Bitcoin and family. And that's actually why I created my first YouTube video, to convince others. And that's how the YouTube thing actually took off. So I kind of stumbled into it. So let's talk a little bit about what does it mean. So first of all, I have not bought Bitcoin since the recent 52K dip. That's the first thing I want to mention. And my cost basis is obviously very low. But to me, Bitcoin is still the safest asymmetric bet. But remember, we've gone up 6x in 6 months, which is quite dramatic. So when you think of it in those terms, it's no longer as completely attractive as when you were buying at 4,000 or 9,000 or 12,000 because it's around so much. Also, it's important to note as well, there's always a 1% risk of a black swan event. And there's a chance that Bitcoin or even a stock could go to zero. So you got to weigh those things in your head. But the most important thing to me is in terms of a portfolio. For example, if you have $1 million, imagine you start with $1 million, and that's a question that came up later today, and you have a 5% allocation in Bitcoin. And that 5% allocation does a 6x gain. Now you have, say, $360,000 in Bitcoin, and your portfolio is now above 1.3 million. So what I'm trying to get across here is examples of how different assets can impact different portfolios differently. Now, if you look at stocks, for example, my option trades on MicroStrategy and my Leap options on Tesla, they got far higher returns than my Bitcoin did. So that's why I invest in equities as well, not only to balance the portfolio, but to wait it out carefully and also get, very good returns as long as you're, of course, backing the right horses. And that's a lot of what this channel is all about as well. In addition to just Bitcoin, you'll also know I also hold Ethereum. So I hope that kind of answers your question. It's never good to have all your eggs in that one basket. But then I believe in holding maybe 10 or 12 different assets. Any more than that, you can't focus on. And as you know as well, I don't believe that much in things like EFTs and mutual funds. So that's why not all the eggs are in the Bitcoin basket. But it is the biggest asymmetric bet that I've seen in my lifetime. But again, my cost basis is different. My attitude would probably change if I was investing today. And I would still want to invest in things like MicroStrategy and Tesla as well, although they are somewhat derivatives of Bitcoin anyway. So thank you for the question, Chris. Okay, the second question is from Josef. Question: do you agree with me that institutional investment mainly affects Bitcoin? And if so, wouldn't that mean that for altcoins we will see a 2017-like scenario, but not for Bitcoin? Excellent question. Yes, there's a lot more institutional money flowing into Bitcoin than there was in the year 2016. It was all retail. This is all heavy, high net worth individuals and family offices. That being said, I do believe some institutional money is trickling into things like Ethereum. We already saw that with some of the treasuries. Most of the treasuries are going to Bitcoin, but there are some companies like one firm in Hong Kong that is also putting a little bit of their treasury into Ethereum as well. And I believe over time, institutional money will trickle down more into some of the more established DeFi coins. But the lion's share is definitely going into Bitcoin as a safe hedge against inflation and a good diversifier for portfolios for high net worth individuals. And as a result, these people tend to hold. They're not speculators or traders. And I think as well, not only the institutional money, but also the treasury money that's come in will make Bitcoin a lot more stable. In fact, if you look at the Bitcoin trading over the past 5 days, you'll see that it is far more stable than ever in the past. So from that perspective, yes. And I think altcoins could get hammered a lot more than Bitcoin. I think Bitcoin will be a lot more stable. I don't see a drawdown going to 85% as we did in the past. So great question. So third question from TJ Borriello. Thoughts on the JPMorgan Cryptocurrency Exposure Basket in the context of IRA accounts? Well, first of all, I want to talk about the basket so people know exactly what it is. So JPMorgan, Jamie Dimon went on the record in 2017 saying that he would fire any trader that touched Bitcoin. And now they're jumping in with both feet, which is a big turnaround just in the space of a couple of years. And JPMorgan are planning to launch a product that will give investors exposure to cryptocurrency through 11 Bitcoin proxy stocks, or what I call Bitcoin derivatives. And it's just in time because Bitcoin has gone from 4,000 to 60,000 in the last 12 months. But better late than never is what I always say. Now, the lovely part is the basket is 20% MicroStrategy. I've been pumping the table on MicroStrategy since December last year. It's good to see that they are allocating a large part of that. That'll be good for MicroStrategy. And I've been saying that as well to a lot of people. They always ask me, why MicroStrategy? This is one of the reasons. It's an easy on-ramp to get access to Bitcoin. 18% of their portfolio is dedicated to Square, which is good. And the reason for this is because both companies hold Bitcoin treasuries. They also have a mining company called Riot. I don't like the management of Riot so much, so I question that one. And NVIDIA as a mining chip company, which is good. They're both at a 15% each, I think. So those top four companies make up 70%. PayPal's also in there. And then they have AMD and Silvergate Capital. Again, both questionable. They're missing, as far as I'm concerned, key names like Galaxy and Hut 8, and maybe Marathon Mining if you wanted to edge out into a little more of a riskier play. But net, they've done well to create this basket. Now, in the context of an IRA account, yeah, it's good because 70% of the portfolio is solid. The other 30% I would question, but that's just me. And if it's the only thing you have access to in an IRA, yeah, I wouldn't mind it. But then again, I would build a better portfolio than what JPMorgan have done. I don't think it's truly reflective of the crypto world. So I would actually nearly recommend you build your own portfolio in your IRA if you can access companies directly, especially the Canadian names of Galaxy and Hut 8. I think they are very good long-term safe bets, sorry. So thank you for TJ for the question. Again, I just find it fascinating the way JPMorgan is getting in on the game. But and they're telling, well, actually two other things I just forgot to mention as well. They're advising their high net worth customers to invest 1% of their portfolio into crypto-like assets, and that's what they're going to use this basket for, so they'll have no problem selling it. And the second thing, they came out with a new price target for Bitcoin, 130,000. So a little bit of good news. But again, I'm not sure if their basket is well structured, but if it's the only thing you have in your IRA, why not go for it? So the next question is from JL Browning. As for me, if Michael Saylor and others are correct, the USD asset inflation is as high as 20% and increasing. Why should investors stay in stocks, indices, etc. that will only perform at 7%? Isn't it a sign that crypto is the new safe haven? This is an excellent question, and you've heard me talk a lot about things like inflation and hurdle rates that exist today. So first of all, crypto is risky. Although I say Bitcoin is the biggest asymmetric bet I've seen in my lifetime, there is some risk and volatility that comes along with that. But stocks are also risky. So calling crypto the new safe haven, it's probably a bit of a stretch. Now, in terms of hurdle rates and inflation being 20%, I think when I listen to people like Cathie Wood, she calls her new hurdle rate being 15% per year. Basically, if a stock can't grow at 15%, she doesn't want to touch it. So I wouldn't say the hurdle rate is 20% just yet, but it could be as high as 25% depending on how things develop with money printing and everything else. But yeah, as many people say, this is 1 to 5% of your portfolio should be in crypto to hedge against things like inflation. And that's a good way, but putting all your eggs in the crypto basket, of course, many people advise against. That being said, I would be guilty of breaking that rule. Anyway, thank you, JL Browning, for the question. Next question, I think it's question number 5, is from Yogabum, probably a yoga master. Is there an acceleration of shift to crypto, and isn't that very disruptive to the world economy and governments around the world? So isn't that bad for everybody? For example, Argentina. Well, this is a great question. I think there is a lot of creative destruction happening, and a lot of disruption will be driven by blockchain. There is a blockchain revolution at hand, and only time will tell exactly what the damage is done. But what I can see out there in the marketplace is, one, people are getting very impatient and they're learning very quickly. People in many countries around the world now are feeling the firsthand pain of inflation, and it's destroying small and medium-sized businesses, and it's really hurting economies. And you know the list of these places. I don't want to mention any countries specifically, but I've listed them in previous videos. There are also little revolutions taking place on the ground with people where, some economies may have tried to ban Bitcoin, and people are finding ways to work around and get access to it because they know it's critical for the future. But it's hard to say where things will go. I don't think this whole revolution is going to bring an end to central banks and their responsibilities as we know it today. But I do believe there's going to be a lot of disruption coming down the pike for things like the banking industry, real estate industry, the insurance industry. All of these will be heavily disrupted over the next 5 years. And part of it is because I believe there are chronic inefficiencies that need to be weeded out quickly, and I believe blockchain is very well suited towards that. So we'll see what happens. The other problem is, of course, with the free money printing that's happening all around the world, at some stage, the piper will have to get paid. And when that happens, things are going to break. So, the future is going to be very interesting over the next 5 to 10 years. And there's another question that came in that I'd talk a bit about the future too, but I think it's going to be a time where we all need to really take care of ourselves and look after our own destinies because, again, expect a bumpy ride over the next 5 to 10 years. So thank you, Yogabum, for the question. George H., if you were starting a portfolio today, give us ideas, starting with $1 million and maybe starting with $100,000 in options as well. What would you do? Great question, George. I got this same question from many, many people. Some people said 40,000, 100,000, 400,000, 300,000. Everybody's asking this question this week. Everybody's all of a sudden trying to take control of their financial future, and they want to start their own portfolios as quickly as possible. First of all, none of this is investment advice. Always work with your financial advisor when you're making these types of decisions. Second of all, coincidentally, this morning I posted my holdings, my entry price lists, and my target lists, and target entry prices and exit prices for what I believe are the most important stocks over the next 2 to 3 years, maybe up to 5 years. This is available on Patreon. Not plugging Patreon, but just saying I did that because I don't want to publish this type of stuff widely in case everybody jumps in. Of course, I'm not giving financial advice. I'm just sharing what I do. That's all. But you have to take into account many different things when you're investing as well. You've got to take into account your time frame, your risk appetite, your goals, and family situation, and so much more. So investing just doesn't have one size fits all answer for everybody. However, that being said, I do believe we are living in a time of major disruption, and that's kind of the theme of the Q&A this weekend. And because of that disruption is going to interrupt so much stuff, I believe things like DeFi and crypto and disruptive stocks need to be part of that portfolio for the future. And again, that's exactly what I have listed in my Patreon list that I pumped out this morning. Anyway, thank you, George, for your question. Hope that answers it to some extent. And I know you're in Patreon, so you can see it there. Now, next question. This is question number 7. It's from Raul Hernandez. What does the future of work look like in the year 2030? So this is a brilliant question. I love it because I've thought a lot about this. I've spoken to many people about this. And the news is not all good, but it's good to be aware of what's going to happen in the future. So first of all, I see a lot of change happening. I see the world going peer-to-peer. That means people will be able to do things with each other, borderless, decentralized as we go forward. So think about that. Imagine if you need somebody to create a graphic for you or edit a movie. You can find them. They can be in Mumbai or Ukraine or whatever. They don't need to be in LA anymore or close to you. So what C19 has brought about is a massive acceleration towards a borderless society. The other thing that's going to happen is, sadly, robots are replacing assembly workers very, very quickly. You know, you hear Elon Musk talking about the machine that builds the machine type of thing. That stuff is happening at an incredibly fast pace. I'm very worried about universities. Universities, I think, are going to suffer over the next 10 years. C19 has brought that about, and I've spoken to many people that say, well, my son is supposed to be going to the University of, say, Hawaii. But why pay all that money when he's just sitting at home taking classes virtually? Can he just learn something else on YouTube or Udemy or one of these other channels? And the answer is yes. So I think, again, the way in which people teach in universities today needs to be revolutionized very quickly, or else they're just going to go by the wayside. It doesn't make sense to take on a huge amount of debt to get educated when you're just learning stuff you can learn yourself. Anyway, I hope that's not too controversial. And also, I mentioned gig jobs, the gig economy. Everything will move to a rewards-based system, instant gratification, small little jobs. The days of having full-time employees that do one role are kind of gone. Everything has to happen in short little sprints or stages or gigs. And also, a lot more can be done virtually now. So that's going to happen as well. So again, as I mentioned, you can hire somebody in Mumbai or the Ukraine or who knows where. Other stuff that's happening is, you've all heard about robo-taxis and drones delivering stuff. I expect a lot more of that to happen. Tesla, Amazon, they're going to be big players in that realm as well. And sadly, I see very big unemployment on the horizon as well. Some people believe that a big percentage of the workforce could be out of jobs because of automation, AI. Think again, DeFi, very bullish on DeFi, but what that's going to do to banks and real estate jobs and insurance jobs and that type of stuff is going to be very hard hit, I think, over the next 10 years. And finally, if you just walk into a retail store today, odds are you're checking yourself out at Home Depot or Whole Foods or any of these places. You're beeping your own things and you're not even dealing with anybody. So that's just a sign of what's coming. Now, what I always advise people, and sorry for being long-winded, but you hit a sensitive nerve, try skill yourself in things that are all around creativity, things that robots and AI cannot do. And that's the way you need to position yourself and your children and anybody else. If you have a job that's easily automated, it's time to tool up and learn some new skills. So thank you, Raul, for your question. This is question number 8. Patrick Lee, what are 3 to 5 dividend stocks you'd recommend for retirement, income, and growth as an added bonus? So this is a tough one. So first of all, in my opinion, in general, dividend-paying companies see less price appreciation than growth stocks. Also, stocks with outsized dividend payments often reflect poor earnings, sometimes excess debt as well. And the stock prices tend to just go down over time. So In addition, if the stock is hit or suffering, they can also decide to cut or slash dividend payments. So you can't really rely on them and take them to the bank. So I know back in the day, dividend stocks were like the golden goose, but nowadays they're not. So I can't advise any. I did search, but I'd much rather have a stock, say, go from 100 to 130 bucks a share than a dividend stock that pays 3 or 5% dividend, going from $100 a share down to $60 a share over 3 years, especially with the inflation we have today. So I'd much more prefer to be on the growth side, the disruptive side of companies. And also think about crypto as well and earning interest on your crypto. That can be a lot more lucrative. Of course, crypto is very volatile, but it can be a lot more lucrative than some of the dividends that are paid by some stocks. So great question, Patrick Lee. Thank you so much. Fun question of the day is from Vincent Lemire. For the fun question, what languages do you speak? So languages, I speak German, I speak Swiss German, I speak some French, and I'm working on my English. So thank you for your patience there. And when I was young, somewhere, I can't remember where I read it, but I was reading a lot of workings by Albert Einstein. And he quoted somewhere that if you are fluent in a language, if you can ask 50 basic questions in a language and have answers to those 50 basic questions, for example, hello, how are you? Or what time is it? Or what time does the bus come? Or how old are you? Or how much does it cost? All these basic things. And if you can handle that, list them all out and have 50 basic answers to those questions, you are fluent in that language. And I tried to do that for many years, about 20 years. I'd have a list and I'd write down some of the phrases so I'd be able to handle myself in things like very basic Tagalog and some Scandinavian languages and Thai and some Japanese. And it was a very fun hobby for quite a long time. But again, I hope that answered your question. So everybody, thank you for the brilliant questions as always. Be safe. It'll be an interesting week next week. Expect a big bump in things like Tesla and MicroStrategy. Now that JPMorgan are buying in too. So good times ahead. Thanks everybody. Take care.